Car owners during the Westgate shopping mall terror attack are unlikely to be compensated by insurance companies. This is due to the fact that most insurance firms in the country do not have cover for such incidents. Adelaide Chagole with the details.
The terror attack at the popular Westgate shopping mall left in its wake several vehicles damaged at the parking lot. Those on the rooftop parking of the beleaguered mall were either burnt to a crisp or sunk with the building, while those on the ground parking were sprayed with bullets. And now, nearly a week after the siege and losses being counted, the fate of the cars, many not insured against acts of terrorism, is now sinking in.
If you had insurance cover that protects you against acts of terror, then you recover outrightly. If you didn't, you may need to talk to your insurance company to agree on how you move forward in respect to your claim.
However, not all is lost, since the Association of Kenya Insurers says some of its members may compensate car owners on compassionate grounds, like it happened following the August 1998 bomb blast.
It will depend on, one, whether you had the cover; two, the relationship that you have with your insurer; three, how the insurer would want to look at the whole. In
the meantime, the body is urging the state to find a way to minimize the impact, since the attack was on the government of Kenya and not on the affected people and businesses who are just collateral damage.
It would be important for the government of Kenya to look for ways and means of how, to a certain extent, maybe not wholly, to a certain extent, that they will be able to compensate some of the people who lost their lives, others lost their properties, as a way of showing some goodwill.
The body is also proposing the establishment of a political and terrorism market pool, where all insurers providing cover against terrorism will be able to pool their risks, something that will reduce the high premiums currently available for these covers and also increase the number of players willing to insure against such risks.
When we put all these risks together and we form one pool, then purchasing reinsurance cover is going to be reasonably cheap. And when the reinsurance is cheaper, the primary insurance cover is also going to be cheaper to the consuming public.
Adelaide Chagole, KTN Business Today.